Welcome back, everybody. Today's video, I'm going to talk to you about paying off your mortgage and whether from a numeric standpoint it makes sense to do or not. Now, when I talk to clients about paying their mortgage off, a lot comes into play. More so than not, it's a mental feeling of being debt-free, mortgage-free, and sometimes even though the numbers make sense that you don't pay your mortgage off or you do pay your mortgage off, the direction that the client goes is based on what's going to make them feel the best. A lot of my clients that have come from lower income families or middle class families, getting that debt paid off is numero uno on their financial checklist. So even as I go through some of these numbers here, keep that in mind. This is not for everybody. There's something to be said about being debt free and having no mortgage or not owing anybody any money, whether it's cars, mortgage, whatever the debt is, student loans, etc. So in this example, I'm going to go through assuming that a person has a $100,000 mortgage balance left on their house, and they also have $100,000 in assets. So either way they look at it, they could pay off the mortgage with the asset or keep funding the mortgage to pay it down and let the interest grow in that separate account. So again, this concept comes down to simple interest versus compounded interest, and it's good to look at the figures on this. So let me go through an example here. If you had a $100,000 mortgage payment that is at an assumed interest rate of 4%, which currently is fairly high. So if you are in a mortgage that is over a 4% rate of return, touch base with me to see if it makes sense to refinance. I can get you in contact with a couple premier mortgage lenders that I work with and have had great success with clients. So the $100,000 loan, if you look at the principal and interest payment, you're paying $477 per month for that $100,000 loan at 4%. So over the 30-year period, you're going to end up paying an interest cost of $71,870. Now, I'm not going to get into the tax savings of the mortgage. Obviously, that can come into play. Whether the actual interest cost is less because you may have the opportunity to deduct some of that interest on your tax return. But for now, I'm going to leave that separate. So over the course of 30 years, you would end up spending $171,870 for that 30-year mortgage. If you decided that the $100,000 you have invested is going to earn 4%. And again, I'm going to assume that this is tax-free as well, just to keep things clean. 4% tax-free is something that is achievable out there. You would have accumulated $224,340 over a 30-year period. So comparing the simple mortgage, you paid $171,000 versus letting your $100,000 compound, you would have $224,000. On surface, if you were earning 4% tax-free and your mortgage was at 4% rate, it makes no sense to pay your mortgage off. That you have more money at the end of 30 years than you would have if you paid the mortgage off. So this concept is, again, it's not for everybody. A lot of people can't get past that. I owe money on my mortgage and I want to be debt free. Other people, I see this with a lot of entrepreneurial mindset individuals or business owners, they don't mind having that leverage because it gives them access to that other money versus paying down the mortgage. So having that $100,000 available to you opens up more avenues for investment, starting another business, etc. And touching on a little bit from an arbitrage standpoint, If an investor can earn more than 4% while paying 4% on a loan at simple interest, the gap widens on how much more money you can accumulate based on where you're putting the money. Again, brief synopsis here. This concept is not for everybody as far as maintaining that mortgage while having the ability to pay off the mortgage. A lot of people, I call it the pillow on the head test at night, of what keeps you up. And some people, the mortgage is one of those items that they are just feel much better, will sleep easier knowing that that mortgage is zero. If you have any questions on this concept or want to discuss how it could impact in your specific plan, I'll leave my contact information up. Please let me know, and see you next time. Thanks.